Hey guys, Sean from SGT Report, and I'm very happy to have on the line Ron Hera of Hera Research. He's the founder of Hera Research, a terrific analyst of companies that produce natural resources, and a macroeconomic expert. Ron, I really appreciate you taking the time. Thanks for joining us.
Well, thanks for having me on, Sean.
Well, it's our pleasure, and it's guys like you that help us all keep the eye on the ball, because what we're seeing worldwide is absolute scandal from the banksters. We're seeing this LIBOR scandal, which I think you would agree that nobody will go to prison for, and nothing will be done to correct it. And we're seeing this Knight Capital high-frequency trading debacle on Wednesday, August 1st, in which $440 million vanished in under an hour. Now, Ron, you've said that we're living in a computer-generated dream world. What does that mean, this computer-generated dream world?
Well, the Knight Capital, and you know, these are being called scandals in the news media, but I actually would want to correct that. These are crimes. That's what we're talking about. We're talking about fraud, and we're talking about theft. So Knight Capital is precisely an example of the computer-generated dream world. It's one of the facets of what I've been calling a computer-generated dream world for the last year or so. And basically, you know, when you have market manipulation, whether that's just backstopping financial institutions, or whether it's the President's Working Group on Financial Markets, or whether it's the Federal Reserve doing QE, all these interventions are basically creating an artificial environment. They're replacing free market forces with artificial forces like basically monetization and other things. So holding up the stock market, pumping money into financial institutions, etc. So that means that we're not in a real market. And this computer high-frequency trading is just another example of how it's not really a freely traded market, because you've got these rent-seeking technologies with basically their hands in the cookie jar.
Yeah, their hands are in the cookie jar, and there seems to be no cookie police. I mean, why is it that the people of this country are so cowardly, Ron? I've really been thinking about writing a piece lately saying that the American sheeple are the most cowardly people on the planet, because it seems we'll stand for anything and won't fight back and won't resist this tyranny, this banking tyranny, this criminal enterprise. You say that we're living in an age of rigged markets, and arguably all markets are rigged at this point. When will anything ever be done about it? I mean, how much more of this can we take before people rebel?
Well, I'd point out a couple things. The first is that the average person really has no concept of what we're talking about. I mean, they might feel that there's some shenanigans going on in the financial market, so they might feel like the government is unduly influenced by big banks. But most people aren't going to research these issues. I mean, the average person doesn't know what high-frequency trading is. So, there's a factor there that just has to do with the education of the populace and how aware people are, the public is aware, how aware the public is of these issues. So that's one facet of it. Another facet of it is that, there is, the news media coverage and, the lack of law enforcement in effect is another issue, is that the government's position, let's say on the mortgage, the subprime mortgage debacle, is that no crimes were committed. The same kind of thing seems to be happening with LIBOR. Sure, a few, junior, analysts or traders might be thrown under the bus, but, the institutions won't be taken down. They'll never be broken. They're not, under the current policy regime, they won't be broken apart. None of the executives of those big banks are likely to be even charged with a crime. So we're in a climate where it's sort of a free-for-all for the financial institutions that are backstopped by the too-big-to-fail policy. And under those conditions, what that means is that, the attitude of regulators, the attitude of law enforcement, the attitude of government officials, the statements that they make really don't seem to suggest that there's anything wrong.
Yeah, you're right, and the media is complicit in not telling the truth. They're referring to the Knight Capital debacle as, quote, a glitch. It's just really beyond the pale at this point. Why don't we bridge over to precious metals, because, one of the founding principles for, my website is to talk about precious metals, real-world assets in physical form that can help hedge against a calamity, a worst-case scenario, a hedge against this epic criminality. Do you mind if we play a word association game? I've never done this before. You open to that?
Sure, why not?
Okay, so here are the words, and then you tell me what they mean to you. Fed primary dealer, J.P. Morgan, physical silver.
Well, obviously, J.P. Morgan is one of the primary dealers and most probably one of the owners of the Federal Reserve. They have a huge short position in silver, or at least it is thought to be J.P. Morgan's position in silver. And it could well be that was one of the factors that contributed to the so-called London whale loss, and they did have a loss of, I think, $4.2 billion. The liability is potentially much higher, and what comes to my mind is the fact that, these London whale trades, so-called, have to do with over-the-counter derivatives. And these OTC derivatives are really another form of leverage, and, in my view, a source of risk for the financial system. In fact, I believe they're the primary reason for the too-big-to-fail policy that's in place today. In other words, when Lehman Brothers failed, this took out a major player in the whole web of the over-the-counter derivatives. So that was a failure of a counterparty, and that threatened the failure of AIG, which had sold a lot of these contracts. So if AIG had been allowed to fail, then they would have dropped out of the equation as well, and that would have completely unhinged the entire OTC derivatives house of cards, and that's exactly what it is, because it presupposes this whole idea of risk cancellation, meaning that I take a bet on one side and then I hedge it, I buy insurance against it on the other side. The idea being that, at least on paper, theoretically, I don't have any more risk. It's called risk cancellation, and that's why we have such a huge number of OTC derivatives. It's over $708 trillion. Risk cancellation doesn't work if random counterparties literally disappear from the map. And so the problem is that's why you have to have a too-big-to-fail policy to prevent this OTC derivatives house of cards from collapsing.
Ron, that was great. I want to do one more, so here you go. HSBC, money laundering, physical gold.
Well, the HSBC, yet once again, it's being called a sort of a scandal in the news media, although it's actually criminal activity laundering money for drug cartels in Mexico. This is another great example of how, when I mentioned how the spread between the real economy and the financial sector is growing, and that the financial sector has become too large for the economy. And the fact that the too-big-to-fail policy also really indemnifies these too-big-to-fail institutions against criminal proceedings. So you might see some fines and settlements, but in reality, those are just a pittance. I mean, that's a fraction of the profits from the ill-gotten gains, so to speak. And so crime is a business model. Not only is financial crime a business model, but in fact, because the spread between the economy and the financial sector is growing, for these companies to maintain their revenues and profits, they really have to become more and more aggressive in how they derive their revenues. So because they're on the one hand indemnified against criminal proceedings, so to speak, I mean, it's not literally true, but in effect, the executives won't be jailed. They're too big to fail, too big to jail. So what will happen is, these companies, and you're seeing it happen now, they're going to go into more and more gray areas, so to speak. And so, you see money laundering, you see high-frequency trading, you see rigging of LIBOR, you see MF Global or PFG Best imploding and customer money evaporating. So these kinds of things are going to become more and more common because the financial sector is going to become increasingly desperate, and at the same time, almost no matter what they do, the executives won't be jailed and the institutions won't be broken up. So we're in a situation where the government and the regulators have practically invited these institutions to commit crime.
Yeah, it's a fascist system, and unfortunately for the common man, unfortunately for those of us who love liberty, the fascist system means the government is the corporations run the government, and so there is no justice. As Gerald Celente likes to say, the justice is just for us. I mean, it's not for these too-big-to-fail criminals. And if we can't break them up, then we're stuck as slaves living under their command, and ultimately then what is the end game? The end game is debasing the currencies until this system fails, and then hopefully we can roll out a new, better system?
There will be fundamental upheaval and political change. The political will isn't there yet. So, I read recently that the median household wealth was down 40% from its peak back in 2006, largely as a result of the fall in housing prices. Well, if American households have lost 40% of their wealth, I mean, let's just say in ballpark figures, and we don't have fundamental upheaval and political change. I mean, we've had Occupy Wall Street, but It seems like that's mostly run its course at this point. We're having an ordinary election with two ordinary candidates, a Democrat and a Republican. So there's no fundamental political change. There's no political will in D.C. to break up the big banks or to overhaul our regulatory infrastructure or to prosecute any of these executives of the big banks. So 40% is not a sufficient number. Now, let's just suppose that I'm right about the spread between the real economy and the financial sector growing, and my proposition that the banking sector is outsized. It's too large for the economy. So let's say those things are true for the sake of argument. That spread is growing. It's increasing. The real economy is decaying as the financial sector is being artificially maintained. So that means that maybe in another 4 years, at the end of, let's just say, the Romney administration, now, Americans wouldn't have lost another 40% of their wealth because, the housing has, I don't know if it's bottomed yet, but obviously you're not going to lose wealth at the same rate over the next 4 years as we have over the previous 4 years, at least probably not. So let's just say it's another 20%. So now you skip ahead 4 years from November, and Americans have lost 60% of their wealth from 2006 numbers. Let's just say that that's the case. So for the sake of argument. Now, is that enough? In other words, if 40% isn't enough, we already know that. 40% loss of wealth is not sufficient to bring about fundamental political change, not sufficient to break up too big to fails, not sufficient to prosecute the heads of banks that are committing crimes. Is 60% loss of wealth sufficient for that fundamental political upheaval and change? And what I would say is maybe it is. I don't know. Maybe it is, maybe it isn't. Maybe it'll take another 4 years. Maybe the real number is 80% before there's fundamental political upheaval and change, and there's a real action in terms of changing our policies.
Hey guys, thanks for watching part 1 of my interview with Ron Hera. Don't miss part 2. Hyperinflation is a certainty between 2016 and 2020. And please check out my new website, thelibertymill.com. Real news from the very best websites in the world, 24/7. Thanks for watching.